If you give up, you're just like everyone else. Chris Evert. My friends, don't give up. 10 to 15 minutes each and every day. I don't care how long it takes you to master the charts. You can do it. And we give you every tool here to do it for free. All you have to do is spend the time, 10 to 15 minutes each and every day. That is all we ask. And again, don't worry about how long it takes. You'll make up for it. When you master the charts, you will make up for it in such short a time period. You will be thankful for every minute you ever spent learning it. So stick with us. And Patreon members, thank you so much for underwriting the cost of the channel. If you're not a Patreon member, become one. First thing you get, options made simple, charting wealth way, plus weekly vertical crossovers every week and 3-wave trades, all sorts of great stuff. Worth every penny. Let's jump into these charts. We see stocks and gold are up. Bonds and Bitcoin down. Now, as we look at this long trend line, we can see where things, let's check out what the high was back 2 weeks ago, 5/18/22. Where was it last week? High, 5/17/38. This week, 5/15/48. Now, we did have lots of volume, but what does all that red volume show us? Now, remember, it's not negative volume. It doesn't mean it's all selling volume. What it means is that it opened lower than it closed the week before. That's all this means. Whenever you see red, it means that the chart opened for the new time period. This is the 2-day chart. This is the weekly. This is the half day. But when you see red, it means that the next candle, this candle right here, opened lower than the prior one closed. That's all it means. But it's good to know that because it gives you a heads up. And you can see last week didn't reach the high of the week before. This week, still not reaching the high of the week before. And you can see what we've done too is we've dropped outside the trend line. Now, we can fix that by simply doing this. But what does that do for us? Not a lot, because we're leaving out the most recent candle. If we put it in, we still see that we're right there just below the candle itself. So however we want to do it, we can see a weakening occurring. Now, we saw this happen before. In fact, a lot weaker. We had a doji here. Then what happened? It moved up, digested the gains, and then shut off again. Is that what we're going to do again? It is possible. My friends, in today's world, anything is possible. They're printing up so much money backed by nothing, inflating the money supply, that real stuff like stocks, like real estate, like your food bill, all of those things are inflating out of sight. I saw where someone went back and looked at the way that we measured inflation back in the 80s. And if we, oh no, it was jobs. The way we measured jobs back in the 80s, they used to ask per household. Now they ask just how many jobs, period, in the household. Not how many people are employed, but how many jobs. So if you've got a husband with 3 jobs and a wife with 2 jobs, and it's only 2 people in the household, but they have 5 jobs, they count it as 5 people employed. That's ridiculous. If you take that out, just heard 25% unemployment. Don't know if that's true. There have been people trying to add those things up. It wouldn't surprise me because for my time in the market, I've looked at the way that they measure inflation, that they measure CPI. And what do they not include? Food and fuel. Are you kidding me? But it does make it look a lot better. And again, garbage in, garbage out. Enough on me. Let's talk about where we are. We are slowing down. We will pay attention as we move into this new week and see just what is actually going to happen. Are we going to die on the vine slowly? The beautiful thing is, if we do, pay close attention to this volume candle. We see that we had high volume and hardly any movement. What does that show you? Well, it shows you that there may be a distribution going on there. If you have read what we've written, what we've shared with you on volume, particularly what we have learned from the likes of Jesse Livermore and others, is that when you see a small candle but crazy volume, it's telling you something. And it is many times when you see things peaking up, it's telling you that the smart money is getting rid of their stock, waiting for the dumb money to buy it, and then things to go down. Don't know that's happening. Don't know that's happening at all. We did see, average volume here when we had the doji, and then things took off again. So we'll wait, we'll watch, we'll pay attention, but we'll keep in the back of our minds this high volume and what it might mean with that weak little candle. Now, let's move on from the S&P 500 to the NASDAQ 100. Check it out, even weaker. Almost a doji last week, a very small spinning top. This week, starting off with a doji. The high we saw back on the week beginning the 4th of March, 448.64. Last week, 444.02. This week, 441. Again, nice volume peaking here, and then things again slowing down. If we go into the red this week, you could have looked to pull a trigger when you saw this. I wouldn't, because there's just not enough there for me. But again, we'll wait, we'll watch, we'll see. Hopefully you'll have a good practice trade coming up sometime this week. And I tell it all the time, we're not a stock calling service. We don't get paid anything. We're not giving you advice. We're an education firm. Want you to practice trade with us. Let's move on to bonds. Now, this was interesting, and we talked about this over and over again. We had bonds peak here, didn't we? We had interim high peak with lots of volume. Stocks had, moved up. We didn't have any kind of signal decently with our volume when it rolled over and went down. Then we had what looked like might be the start of a new up move. But what did it do? It died on the vine. Went down for 3 weeks. Then with very little volume, tried to peak up again. Then last week, we saw a doji. So it tried to get up the hill. I mean, you can sort of see it. It gets up to the top of the hill, it rolls down. It tries to get up, it fails. It tries again, it fails. And now it's starting to move down this week. Problem is, we don't really have any super volume helping us out with this in any way. But I'm thinking the way things are starting the week off after the failure to gain any traction, maybe bonds are going into another down move. If you've noticed lately too, what did bonds do at the end of the year? They did the same thing stocks did. They moved up. Then they sort of sold off, and they just couldn't quite catch the fire that stocks did again. So if stocks roll over and head down, what kind of fire is there going to be for stocks to move up? People will be covering their shorts. This may be the portent of stocks moving down. Just saying, maybe. Don't have volume to back that up. But I'm just looking in the crystal ball. I hate to use that analogy. I got to come up with something better than that. I'm looking at what the portents are telling us and seeing, okay, if this matches the story, then I'll go with it. Now, let's look at gold. Gold popped up strong the week, March the 4th. And again, did we have any lead off to this? No, we didn't. We didn't have volume helping us out a lot with an interim low. We got close, but we had also had an interim high back here 2 weeks before, the week ending January 29th. Then we had an interim low, not quite enough volume, but then volume didn't follow on. Then things popped up strong this week, and of course the danger of jumping in late is just what's happened. What's happened? Well, we had a high that week. If you gotten in at the wrong spot, you would have got in at a high of 203.30. The next week, 202.41. This week, $200. You would be on the losing end so far. Maybe gold will catch fire and move up again, but the volume did not help us in the turnaround. So what do? We don't pull the trigger when things don't tell us what they're going to do in a recognizable pattern. Does that make sense? Why would we? Do we have to trade gold? Hell, there are thousands of things to trade, whether it's ETFs or stocks, whether it's Bitcoin or Ethereum, whatever it might be that you want to practice trade. You don't have to go for a deal that's not making sense. It's like when you go to the car lot and they're just asking too much for the car, or you don't really know the value of the car. You want to go home and do your research. You don't have to buy that day, so you wait. You wait for the perfect setup. You wait for the good deal, and we ain't seeing it. Let's move on to Bitcoin. Bitcoin pulling back on HODL, back 3.22% for the day. You can see again as we start the week off, if we redrew this, how are we doing? Well, again, what is the best? It's hard to attach three of these. It really is. It's just not possible. Well, now that's better, at least giving. I think I'm going to keep it here. And again, you got to use a little bit of your own skill. But what we saw last week, super high volume. We saw super high volume back third week after Bitcoin was taking off, even a little bit higher. But last week, really nice high volume. This week, blowing that off as we start. You can see where the 2-day chart has pushed through. This is just the first day of the latest 2-day candle. It's pushing through that weekly trend line. Half day, just sitting right there on it. And again, this is on our HODL. This is the Bitcoin ETF. We look at 24-hour-a-day Bitcoin. Again, you can see how the week has started off. About the same candle-wise. That's what makes comparing these charts helpful. You can see the Bitcoin ETF, which is traded during market hours, compared to the Bitcoin 24-hour-a-day chart, and they're not dissimilar. And I mean, they are a little bit, but it always seems to work out because it has to, right? The ETF is going to track the underlying asset for the large part. You can see a spinning top on the 2-day, followed by the first day of this latest 2-day candle. Actually, this is the second day. This is the 24-hour-a-day Bitcoin. This started on Sunday. It'll end today. So you can see that it is down, and you can see that we are still above the weekly trend line on the 2-day and on the half-day. Things peaked up to its most recent high back on Sunday, and then started, it was Sunday afternoon, evening, and then started rolling off since then. So that is where we are. Bitcoin and bonds are down. Stocks and gold are up as we start this week. I want you to be with us each and every day, 10 to 15 minutes. That's all we ask. Patreon members, thank you again for all your support. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.